Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. In this final episode of the 2023 Annual Outlook podcast series, we focus on currencies. Just as a reminder, in recent episodes we discussed the macro, fixed income, equities and alternatives outlooks. Turning to currencies, the past 2 years have predominantly been a story of US dollar strength. Also, the FX volatility was elevated through 2022, increasing the macro risk premium. However, the key question for investors going into 2023 is if the dollar strength can hold. To state things upfront, we do believe that the US dollar strength is behind us. In fact, US dollar peak is one of the 3 peaks we described in our recent podcast titled 2023 Investment Strategy Outlook, Peaks and Valleys. We see this US dollar peak also providing respite for other major developed market and emerging market currencies. To discuss the drivers of currencies, we are pleased to be once again joined by our fixed income strategist. Prerana, welcome back.
Great to be back here again, Kishore.
Prerana, could you explain the reasoning behind why we think the US dollar has peaked?
So we expect the dollar to weaken from the current levels and do not expect the broad rally of 2022 to repeat. Rise in interest rate differentials between the US and the rest of the world as the Fed led the race of tightening was one of the biggest supporting forces for the US dollar. And we do believe that the interest rate differential could not be as influential in 2023, mainly on the prospects of less Fed policy uncertainty and lower interest rate volatility. But on the other hand, growth differential and risk sentiment will take center stage in determining the path for the US dollar in 2023. When it comes to growth differential, a synchronized global slowdown could lead to significant weakness in the dollar. Going into 2023, market consensus was expecting US growth outperformance compared to peers, but we have started to see the evidence of US growth disappointment and at the same time Eurozone recession probabilities coming down and matching with that of the US. A significant US growth outperformance could limit the dollar weakness. Similarly, sizable US growth disappointment and increased hard landing prospects could also reignite the US dollar rally due to dollar safe haven status. So in summary, we expect the dollar to remain weak, but we rule out the possibility of a sizable dollar weakness.
So what does the peak US dollar mean for other currencies then?
With the strong dollar being the main theme of 2022, of course, it was the disappointing year for the euro, pound sterling, and the yen. But now we hold a more positive outlook on the yen. We believe the yen is likely to strengthen in 2023, even after taking into account the recent rally in January. This is not only on account of the weak dollar prospects, but also because of the tightening of interest rate differentials and the prospect of diverging central bank policy, that is the prospect of Fed backing away from the rate hikes and the Bank of Japan eventually embracing a more hawkish stance. These factors should continue to support the yen rally. In addition, the yen looks cheap in real effective exchange rate terms, not only compared to its historical levels but also compared to the peers. In case of the euro, we expect the currency to stabilize in 2023 and record a better performance compared to last year. Risks still remain, that is in terms of geopolitical tensions, elevated inflation pressures, and the ECB still lagging behind the tightening race. But the currency is already accounting for these risks. At the same time, a strong euro rally looks difficult, mainly on account of the challenging economic situation in the region. And finally, in case of pound sterling, we expect the GBP to remain stable versus the US dollar, given the Bank of England has closely matched the Fed tightening cycle, but expect the GBP to weaken versus the euro.
That's great. Thank you for joining us and sharing your thoughts on currencies with our listeners.
Thank you, Kishore.
So in summary, on a 12-month view, we're now negative on the US dollar, positive on Japanese yen, and neutral on euro, British pound sterling, and the EM currency basket. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. My name is Kishore Muktinutalapati, and I'll be back next week with another new episode of Global Investment Insights.